Hello everyone, I'm Steve Savant, syndicated financial columnist and money-colored commentator. On today's show, term life insurance, part 2 in our series on protecting breadwinners, partners, and key employees. Well, welcome to our second segment. We're talking about term life insurance, and boy, there is some tremendous coverage ability here. We have really lowered our cost of insurance over the years. In my 35 years, it's just been unbelievable how low term insurance has dropped. And that's because we are just not dying. We are in a great culture, a fantastic society. And because of that, we have very low mortality on the big scale of things. And especially when you look at when you're under 50 years of age, I mean, people just are very few people die before 50 years of age. Now, when I'm looking at coverage, we talked about in our first segment, we're insuring the future. But in the second segment, we're actually talking about product. And there is a tale of two cities here. And I just want to walk you through the philosophy of it. And then you can make your own decision for your own family. One of the big things is, am I going to buy term insurance, which is temporary insurance, or am I going to buy permanent insurance, which is going to be forever? Now, when I look at term insurance, I could buy it in 5-year increments, 10-year, 15-year, 20-year. I could even get, depending upon your age, 30-year life insurance. And there are so many different health categories that I can pick from. If I'm in really good shape, I'm going to pay some fantastic premium. It's going to be very low. And this is an excellent idea to think about, because when you're looking between just to buy term, sometimes I might even have a permanent scenario. I might even have something that's going to be ongoing, but I just can't afford a permanent policy. So I always want to try to say, if you're going to buy term, and you're a family man or family woman, you're part of the breadwinner society, you need to start looking at term insurance probably for 20 years, children being involved and so forth. So I want to look at 20-year term. I always want to pick something out that is convertible. That means I can change it from term, temporary, to permanent, ongoing, and always going to be in force. I want a policy that not only lets me convert to a permanent policy, but I want to deal with a carrier that has a good track record of creating permanent policies that are really client-centric. And that's what I'm looking for. So if I don't see that, if I'm just buying straight out term, just remember, if anything ever happens to you and you lose your insurability in the future, that could be a problem. That's why I like convertible term insurance. Almost everybody that's competitive has provisions in their contract. You'll have to see how long they hold on, but you definitely want to talk about it when you're with your agent. Interesting that there are some term contracts that actually give you return of premium. Let's say you bought a term contract and you held it for 20 years. At the end of the 20 years, you didn't die. They're going to return your premium to you. Unbelievable. So they must have made money during that time above and beyond their cost of insurance, and they made investments. They must have done pretty good. So they're willing to go ahead and return premium. If you think you're going to hold on to a policy, that could be a play. Now, just keep in mind that ever since I've been in this business, 35 years, the term pricing or term premium has precipitously just been lower every single year. And not every year, but over the collection of 35 years, it has dropped so significantly that sometimes people say the return of term premium is really not worth it, because I really know that based on history, the premiums keep reducing and getting smaller. And so I could have paid less. But if you're really that person, you're saying, hey, I think they've really bottomed out. Term costs aren't going to get really that much cheaper. You could lock down a 20-year and you could get return of premium, a huge issue. Listen, you could even get waiver of premium on your term contract. So let's say you're going to say, if I became disabled and I had bills to pay and I didn't have that much money saved up for my 90 days in case I had unemployment, I could get a waiver of premium, which would say if you're really disabled and you can't work, you are able to waive the premium. Some of them will just waive the cost every month that you're out. Some have 6-month waiting periods. You just want to look at what contract works for you. And by the way, some of them have a definition of unemployment. Remember, from contract to contract, you have to look at the definition, talk to your insurance professional to make sure you understand what you're getting. But those things are great little add-ons. I love the idea of having a waiver of premium, and I also like the idea of unemployment premium. So there's periods in your life where you may not have a job and you may be able to qualify for the carrier to pick up your premium. I love that. Now, when I'm looking at it, I want to compare all the alternatives. When you think about it, alternatives, if you're not certain whether term or permanent insurance is right for you, to help you think about it, answer some of these basic questions. And this is all in our book on Guide to Life Insurance. Again, if you say, Steve, I love this, can you send it to me? I'd be happy to go ahead and tell you what it costs and send it to steve@lifesizesolutions.com. If you write me, I'll go ahead and do it. Do you want the insurance protection for a limited period or for life? Now remember, in my view, defensive planning says you will always have funeral costs, last medical expenses, and debt to settle out, even if you're 85, 90. So I want to be able to take care of that, and that part of my life is probably going to be permanent from the get-go. So if you're already 20, 30 years old and you're a young parent, you'll be able to say, hey, I need to really look at this and use this as an obligation to cover all those future issues that I know are never going to go away. Number two, are you more concerned about providing a death benefit or growing cash value? If you're just trying to cover the defensive planning and you don't care about cash value buildup and you do other things, now keep in mind that cash value can be a big boon. It has tax advantages. You could take the money out with withdrawals to basis and policy loans to gain tax-free. And remember, at retirement, that income does not count for the provisional income test for Social Security. So it could be a play. But if you're saying, hey, I really don't need that, I have other investments, that's fine. And then, Ken, another one, do you anticipate that your insurance needs will change significantly in the foreseeable future? Well, we all try to anticipate. I've already said, hey, we're going to college. We want to buy a home. We want to retire our college education debt. We want to be able to put money aside for retirement. We want to put money aside for long-term care. We all have things that we think we want to do, and those are static. They're already put inside defensive planning, and we're covering life insurance, using life insurance to do it. But remember, if you think it's going to change, then you need to start thinking, hey, how should I add on insurance? Will I be reducing my coverage in the future? And then you also want to know, what's the company's cost of purchasing that amount of coverage you need? You could buy the option to be able to purchase life insurance in the future without an insurable clause. In other words, you wouldn't have to take an exam. You wouldn't have to qualify to get your insurance. You've already purchased insurance in advance with using an option. So in the future, if you think, hey, that could happen, I might want to settle that issue right now while I'm healthy, while I'm young, and I can pay for it, to buy a little bit of an option to buy future. So if I have a $500,000, I might want to buy an option for maybe $250,000 on the top of that, just in case I think I need it. So when I'm looking at this, I'm looking at, again, the difference between term insurance and permanent insurance and how I can answer my obligations. Again, term insurance is very cheap. Today, nobody should be without a couple $1,000,000, even in your 20s and 30s, just because you're trying to cover your human value, your earning power throughout your life. To me, that's a cheap way out. Just keep in mind, what are we going to do? We're always going to look at a term contract that also carries a convertible rider, somewhere I can convert it. I can also add additional coverage. I could put long-term care coverage on some of these contracts. I could also put critical illness on some of these contracts. I might even have a terminal illness provision, whereas if I know I was going to die and the doctor's already told me I have 18 months to live, as an example, I could go ahead and accelerate my death benefit and get paid while I'm living. I know, it sounds fantastic, but these are some of the add-ons that you can do. These are kind of like living benefits attached to a death benefit. So if you're looking to cover a little bit more than the traditional death benefit scenario, you may want to look at those ideas. If you don't have that coverage in your group plan at work, this could be a way to go and look at some of these contracts, not all, but some of these contracts actually include these inherent in the contract and embedded. Other contracts, you have to pay for that, and you're just going to have to weigh out, is the extra cost for the extra rider and coverage worth the dollar for you? So when I'm looking at term, permanent, when I'm looking at permanent, I said over here, there's multiple platforms of level period certain, 5, 10, 15, 20, 25, 30 years. Permanent, I may have participating whole life. I have guaranteed universal life. I have regular universal life. I have indexed universal life. I have variable universal life. In my opinion, after being in this business 35 years, for permanent coverage, my first punt position is to look at guaranteed universal life that has a guaranteed premium and a guaranteed death benefit for the rest of my life, at least to age 100. Maybe longer, but at least that age. I'm looking at that first. If you don't mind having accumulated cash values for a little bit more money, you could look at participating whole life. All the other ones are probably not guaranteed. So depending upon the policy and the contract, I don't know if you can really get coverage that you can believe in that premium won't change. To get permanent coverage and permanent premium, you have to look at guaranteed universal life or you have to look at permanent life, participating whole life. One of those two will be able to cover you for the rest of your life. Don't forget to watch our next segment on permanent life insurance, part 3 in our series on protecting breadwinners, partners, and key employees. And remember, before moving forward with any of the ideas on the show, always check with your tax consultant, legal counsel, or financial advisor. You've been watching Steve Savant's Money, the name of the game.
Oh my!